Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Rick Rule is back on the show to answer your questions and give his take on our favorite commodities: gold, copper, uranium, nickel, rare earths, coal, and oil. Rick has 5 decades of experience betting on the natural resource sector. Rick, thank you for your time, and thank you for coming back on the show.
Steve, a pleasure, and thank you for your support and attendance at the symposium last week.
Oh, that was so much fun. I'm already looking forward to next year. I got maybe 10 interviews done, and I kind of have an idea what to expect. So I'm ready to hit the ground running next year. It's going to be a lot of fun.
It will. Thank you.
Yeah. Okay, we've got your the private placement boot camp coming up. That's going to be August 24th. I'm looking forward to that. What can you tell us? What can we expect from this next boot camp?
That'll be different than prior boot camps in that there won't be issuer sponsors. And it will be much more focused. In other words, we won't deal with a general topic like silver or uranium. We will be telling accredited investors, defined as people with portfolios valued in excess of $1 million, how to participate in debt and equity private placements. We will be talking technically about the difference between pre-public offerings and private placements in publicly quoted offerings. We'll be talking both in terms of debt placements and in terms of equity placements. There will be a lot of work as to how. This will not be an entertainment product. This is highly technical. The private placement market has been responsible for most of my speculative gains in my investing career. So it's a topic that I both care passionately about and am deeply experienced in. And for those investors and speculators who are of the means, which is to say accredited themselves, defined by us as net worth exclusive of home furnishings and fixtures in excess of $1 million, and also willing to do the work and bear the risk of private securities transactions, this is, to me, the single most lucrative part of the junior mining market.
I'm really looking forward to it. I've never done a private placement, wouldn't even know where to start, and I'm looking forward to getting a 101 on this. And yeah, I'm very excited. Just like all your boot camps, they've been amazing to our brokerage accounts. And if this is where you made most of your money, then yeah, this should be a lot of fun.
Well, imagine, Steve, in a private placement like Paladin, having a 15-cent warrant, a warrant being the ability to surrender the warrant plus 15 cents and get a share, where the market is $3 bid.
Wow.
In my younger years, I would have said that was the most fun I could have with my clothes on. Now it's merely the most fun I can have.
It's going to be a lot of fun. I look forward to it, like all your boot camps. If you want to join us, there is a link in the pinned comment below, and thank you in advance for using that link. Okay, we got a lot of questions here, Rick. I want to start out. I asked you this maybe a year and a half ago, and I want to follow up life hacks. So financial tips that everyone can do. One that comes to mind that I've practiced is buy a car with cash. Never buy a car on credit or on debt, and then drive that car for 10 or 20 years. Do you have life hacks like that our listeners can take home?
Well, one of mine is very similar. My new car, I think, is 13 years old.
Okay.
I don't derive any particular enjoyment or status from a car. I drive Toyotas primarily because when I turn the key to the right, they keep starting and starting and starting. So I think that's one. I would advise younger people in particular two things. The first is invest in yourself, because you make money offering a good or service that somebody else is willing to pay for. And the utility that you offer others in excess of the utility you consume for yourself is called savings. So it's important, in addition to developing a competitive good or service that you offer others, that you learn to save. Buying consumer goods, as you suggest, should be bought for cash. But it isn't enough merely to buy them from cash. When you finance them from savings, what you do is you become your own bank. You loan yourself the money. So when I was young, when I would buy a car, let's say, this is a long time ago, but let's say I'd buy a $2,000 or $3,000 Toyota pickup truck. I would borrow the $3,000 from my savings account at 1% simple interest with a 3-year amortization. So it wasn't enough merely to buy the car without credit, which is to say cash, but I had to pay back my investment savings account for the amount that I had used to make a discretionary consumer purchase. I think that's very important.
Interesting. I've never, you know what? I actually kind of did that with gold when I was doing some construction. I borrowed against my gold holdings, but I paid myself back in silver because at the time gold was kind of expensive and silver was cheap. Okay, and save, invest in yourself, and by that, that gives you the capital to take advantage of opportunities when they come.
I ask young people to save a minimum of 10% of all of their pre-tax income. I'm not saying that you can't pay $3.50 for a Starbucks coffee when you could make coffee for 60 cents at home. What I'm saying is that you save 10% pre-tax before you buy anything at all. Then, if you want to treat yourself with some of the surplus, that's fine. People tell me that they can't save. But I look at immigrant communities up here where I live in the state of Washington. I know one Filipino family that sends about 20% of pre-tax income back to the Philippines. They make less per hour than most people who are native-born Americans, and yet they're managing to live on 80% of their income. You see the same thing happening with immigrant and Hispanic families in this market. They aren't sadly saving the balance, but the idea that you can't live below moderate income is obviously proven wrong by these immigrant families. It's one thing to live rich, it's another thing to be rich. And in order to become rich, you have to save.
Yeah, yeah. Awesome. Well, thank you. I took your advice. I started going through the Andrew Jackson's Geology 101. That's a great series on Sprott. I can put a link down in the notes below if you guys want to check it out. That's a great class on that. Man, it is detailed. I'm going to have to watch that about a dozen times. Okay, when we were at the symposium, we talked real quickly for an interview, and I asked you, what is the most hated commodity right now? And I kind of listed some of the commodities, and you said, well, actually, Canadian natural gas right now is pretty hated. Maybe you can go into a little bit more detail on that. How can we play that through Birchcliff or?
Yeah, I would say Birchcliff and Peyto are the two easiest ways to play it, the two most efficient gas and condensate producers. Hated, there's a surplus of gas in Canada now. Canada's largest export market is the US, and the US is also exporting natural gas. So it's tough to get Canadian natural gas into the US market. In addition to that, the Prime Minister of Canada has been quoted as saying there isn't a business case for exporting Canadian natural gas, despite the fact that his Japanese partners would like to buy it, his Chinese partners would like to buy it, his German partners would like to buy it, and his French partners would like to buy it. It seems that the whole world sees the business case for Canadian natural gas, with the sole exception, of course, of the Prime Minister of Canada. Geology over time trumps politics. The Western Canadian Sedimentary Basin is one of the great accumulations of oil and gas in the world. It has wonderful infrastructure. Canada has amazing human resources around oil and gas. There are political problems, and there is a temporary oversupply. Canadian natural gas for export, the so-called AECO market, occasionally goes to zero, which is to say there is more gas produced than there is pipeline capacity to ship it. When it isn't at zero, it tends to hover around 2.50 Canadian cents per million British thermal unit. That same natural gas compressed and landed in Tokyo or Shanghai or Rotterdam sells for more like 8 US or 10 Canadian dollars. It takes about $1.50 Canadian to get it there. The energy arbitrage between shut-in Canadian gas and liquefied natural gas in export markets is too great to continue.
Okay. Well, that sounds like an amazing setup. All
Might take
right.
2 years, might take 2 years to play out, but successful investors and speculators, in my experience, have 5 or 6 year time frames. So 2 years shouldn't be regarded as an exorbitant time frame.
Yeah, yeah. And okay. All right. Pato and Birchcliff. All right. Listener questions on gold. Molnar asks, what's his opinion on Newmont? He said in previous interviews, the management he was watching management action and consolidation of Newcrest.
I am positively inclined, but I need to see more progress. Positively inclined in the sense that Newmont management has said that post the acquisition of Newcrest, that they would sell off virtually all of their tier 2 mines and concentrate just on their tier 1 mines. This would free up a fair bit of balance sheet capacity, which I think they need to do. They're in a market where these 2-tier mines vended to smaller mining companies could generate value both for the seller, which is to say Newmont, and for the buyer, which I think is useful. And it would allow Newmont to do something that they haven't done for 20 or 30 years, which is to say lavish love, care, and attention on a few key assets, maximizing those big assets. If they do that, I will be a pretty good sized Newmont buyer. I'm a small Newmont holder now because I sold some Newmont puts, and I got the stock put to me, which is fine. But I'm not a big Newmont holder yet. I want to see progress in these key areas of selling off the tier 2 assets and the redeployment of capital to improve the balance sheet and also to focus on their tier 1 assets.
Yeah, I remember when you were selling those puts, it was around $30 a share. So those have worked out quite well.
Yep.
Okay, the other major, Barrick.
Barrick, I'm inclined. I think it likely sells off as the company continues to advance the Reko Diq copper gold deposit in Pakistan. I think this will be a major positive step for the company, but the market thinks it'll be a negative major step. I think the market is concerned about Pakistan. They're concerned about Baluchistan. They're concerned about the upfront capital cost, which will likely be $7 billion for what likely will become Barrick's largest mine. If they make a production decision, I think there'll be softness in the stock, and I will use that as a buying opportunity.
Okay. Agnico Eagle.
High quality company. It's enjoyed a tremendous price rise, which is deserved. The best capital allocator among the majors. Less well understood is that their 100% holdings in the Abitibi give them as much exposure to gold as either Newmont or Barrick would seem to enjoy in Nevada, which they share. So this focus area in northern Quebec and northern Ontario gives them, because of their consolidated ownership, the same sort of consolidated ownership of major gold camp that you look to Newmont or Barrick for in Nevada. Agnico Eagle has been over 20 or 25 years the best capital allocator among the producers, not as good a capital allocator as Franco-Nevada or Wheaton Precious, but among the operators, certainly the best capital allocator among the producers. High quality company, getting better. I was delighted to have the chairman, Sean Boyd, the former CEO for 2 decades, at the Natural Resources Investment Symposium, and had him sit in on the Living Legends panel, and I was able to have lunch with him afterwards, and really question him about the capital allocation culture that has led to the serial outperformance of Agnico Eagle. Very impressive human being.
Yeah, that was cool to see him at the symposium. Okay, what rankings do you have Newmont, Barrick, and Agnico Eagle at right now?
I have Newmont and Barrick both as fives. I have Agnico Eagle, despite its impressive price run up, as a four.
Wow. Okay. All righty. And let's see. Boyan wants to know what's Rick's take on B2 Gold?
I'm attracted to B2 Gold. That will continue to be soft. I believe, although I don't know, that they're behind schedule and behind on budget with their Canadian construction project. You'll recall that they bought a mine under construction in northern Canada. The prior operators had done a good job, but they were operating on a shoestring budget, a remote mine. Clive Johnson has a wonderful mine building team at B2. They've built mines in the Philippines, they've built mines in Namibia, they've built mines in Siberia, in Mali. Coming home and building a mine in Canada, despite the fact they're building it in the far north, is something I think that's well within their competence. But the market doesn't think so. The consequence of that is that I think the stock will continue to be soft, and I will continue to use that softness as a buying opportunity.
Okay. Okay. And Equinox Gold.
Equinox Gold has worked out very much the way we said it would on your channel 6 months ago. The market is starting to come to understand that their Greenfields construction project in the Abitibi would be completed on time, on budget. It was completed on time. It was not completed on budget, but it was within spitting distance of budget. Now we're waiting for nameplate capacity. The market has responded, and I think the market continues to respond positively.
Okay. And moving on to copper, Ivania wants to know thoughts on the drill results of Chicana Copper.
Disappointing. We were looking for two different things. We were looking for some conclusive third dimension on the gold target, which we didn't get. And we were hoping to hit porphyry mineralization on one of the deeper targets, and we didn't connect on either. There is still lots of exploration upside, but obviously the company didn't drill its worst prospects first. So I would describe it as disappointing.
Okay. Oh, I forgot to ask rankings on B2 and Equinox.
I have B2 at a four. I have Equinox at a five simply because of the share price run up. I had it at a four.
Okay. And Chicana Copper?
Chicana Copper I now have as a six.
All righty. Uranium. Uranium bull market, ironically named, wants to know thoughts on Kazatomprom's buyback and change to tax code.
Still studying the change to tax code. The buyback tells you a lot about what you need to know about the company's view of the valuation.
Yes, means they like it.
Yes. I think the government of Kazakhstan is trying to find a way to increase the social benefit from the uranium industry in Kazakhstan.
Okay. Could that be bad for us?
Sure.
Okay.
I mean, it really depends on what kind of bargain gets struck.
Yeah.
The fiscal terms of the transfer of the asset to Kazatomprom and the public offering took place in a very different market condition, and they were very favorable to investors to the extent that a revised social take is struck, and that revised social take has a 20 or 30-year duration, the same duration that the last one had. That isn't necessarily a bad thing. It just reflects reality.
Yeah. Yeah, I've had them now for probably 3 years, and the dividend is amazing.
Yes, it is. And, by the way, they can afford the dividend. Our mutual friend, Doug Casey, used to say earned dividends are, quote, outward manifestations of inward grace, a quote I always liked.
That's appropriate. Okay, moving on to nickel. Bjorn, this one got a lot of thumbs up. Centaurus Metals, have you caught up on their feasibility study?
On the process of the feasibility study, yeah, I'm very attracted to Centaurus. I'm attracted to very large nickel deposits. They make an awful lot of money. We are at a trough in the nickel cycle. We're at a trough that I suspect continues for a year and a half, as long as the oversupply of Indonesian lateritic nickel continues to come in the market. My experience has been that the cure for low prices is low prices. And we are seeing in the sulfide nickel space the shutdown of existing capacity, which is always a sign of the bottom of a bear market. So I'm very attracted to that market. And I'm attracted to the size of the Centaurus deposit. It's a monster.
Yeah, I went on Google Maps. You said you flew over it in southern Sulawesi, and they're
Not
doing
not
tail.
Centaurus. I flew over the laterite deposits in southern Sulawesi.
Yeah, and they're doing like tailings dams into the ocean.
Yeah, they aren't tailings dams. They're actually physically bulldozing the overburden into the intertidal, just pushing it right off the beach
Holy.
into the ocean. It's something that has to be seen from the air to be believed. Mud plumes extending out 30 kilometers from the disposal sites.
Wow. Okay. All right. And the bet is how long can that continue? Um,
Right.
okay. This one is. Oh, sorry. Do you have any other thoughts?
Nope, nope, nope. That's correct.
Okay. All right. This one is. I didn't know which one to put it under because they have. This is a royalty on copper, nickel, iron ore, gold, cobalt, uranium, and met coal. And Patrick and AJ want to know on the small cap royalty company with a pretty good dividend, Ecora Resources.
Yeah, I'm an Ecora holder. People have been selling Ecora because they believe that the coal royalty is going to come to an end for 5 years. They have enjoyed using the cash flow from the coal royalty to buy other royalties for 5 years. And they have also, in common with many British issuers, been polite to the shareholders in the sense that they have shared some of that coal largesse with the shareholders in the form of a generous dividend.
Yeah, the share price has taken a dump. Is the dividend? I looked at the dividend. I think it was like 10% or something. Is that keeping up with?
Yeah, I think what you're going to see is the movement in their Queensland coal operations from a high royalty face to a lower royalty face. So I would imagine that their coal royalties will come off 30 or 40% over the next couple of years as all of their other royalties ramp up. I think what's happened is that the market has greeted what will probably be overall a 20% reduction in their royalty-free cash flow, which, by the way, gets erased over 4 or 5 years, with a decline in the share price that is of a greater order of magnitude.
Okay, all right. Be patient. Oh, and what is your ranking on Centaurus and Ecora?
I have Centaurus and Ecora both as 4. Understand that they're risk-adjusted 4s. There's greater speculative upside than there is with the bigger companies, and there's greater downside risk too as a consequence of stability. The rankings are always a function of juxtaposing risk and reward.
Yes. Okay, rare earths and PGMs. Animals wants to know any rare earths mining stocks that have your attention?
Not mining stocks. I am attracted to Meteoric, which is a rare earth exploration project in Brazil. And I am attracted to Sovereign Metals, which I guess is more of an industrial material. So let's just say Meteoric in Brazil. The rare earths business is really tricky. You have to know a lot, you have to get it right, and they have to be large. Rare earth deposits ultimately probably need to end up being sold to major mining companies because the people who buy rare earths are more concerned about the stability of supply than they are the price. And I suspect that the ultimate outcome for Meteoric, if that deposit comes to be economic, which I believe it will be that it will be bought by a major mining company. The reason that that's important is if you're a consumer of rare earths, set to Mitsubishi or Daihatsu or someplace like that, you want to be absolutely positively sure of supply. And major mining companies have that sort of reputation.
I sat through their lunch presentation at the symposium, and it was pretty impressive.
So far, the size, the grade, the metallurgy is all working. Of course, they all need to continue to work.
Yeah. Yes. All right. And Randy wants to know, he says, what are your thoughts on Anglo American and Sibanye Stillwater for platinum and palladium plays?
Um, they are both challenged. The low platinum and palladium prices, which are themselves a function of the fear of the extinction, overblown fear of the extinction of the internal combustion engine, and also Russian dishoarding, um, has that low price of platinum has really impacted Sibanye-Stillwater's North American operations. The two great producing companies in platinum and palladium are South Africa and Russia, both of which have political and social challenges. And that, ironically, is of benefit to the industry in the longer term. In South Africa, there is an unfinished social discussion about who will own the mining industry, whether there's outright nationalization or creeping nationalization through taxation. What happens is that neither Anglo nor Sibanye-Stillwater are able or willing to make large capital investments in the platinum mines because they don't know what fiscal stability will look like, and they don't know whether there will be overt or covert nationalization of the mines. That means that they're substituting labor for capital. You can't pay unsophisticated labor a living wage. The mine workers' wages have to go up, but they can't go up because they can't employ capital, and there's not the economics to make them go up. It's a very, very interesting and very, very ugly situation. I like platinum deposits in parts of the world outside Russia and South Africa. Unfortunately, with the exception of things like Bravo, there aren't very many. They're very tough to play. And I don't have the courage to own either Sibanye-Stillwater or Anglo-Plats, given the political circumstance in the recent election in South Africa.
If there is a re-rating because one of those countries, has a hiccup, I think if you look historically back at the platinum and palladium price, I think simply betting on the metal itself will probably give us pretty leveraged upside.
That's a very good point. I mean, the equity that somebody would buy in a normalized situation is the lowest cost producer, which is Norilsk. That puts you squarely in Russia. And if you're an American, that's an uncomfortable place to be.
Yeah. Yeah, we learned that one with Gazprom.
And Norilsk.
Polymetal. Yeah. Okay. What ranking would you give Meteoric, Anglo, and Sibanye?
I have Anglo and Sibanye both as sixes. I have Meteoric as a four, but a risky four.
Risky four. Okay, Cole. Lost Cause wants to know, how would Rick rank met coal producers like Warrior Met Coal and Alpha Metallurgical Resources?
I have Warrior, actually, I have both of them as a five. I think that the met coal prices continue strong. The problem those companies both have is that although they are in areas of good infrastructure and nominally good political stability, neither of them are in the lowest cost quartile as met coal producers worldwide. They're attractive to Americans because they're American producers, of course. But my test for a tier one company is a company that is in the best quartile worldwide in terms of return on capital employed, and also in the lowest all-in sustaining cost quartile. Neither of those companies occupies that space. It's important to note, too, that my recommendation of those companies 4 years ago was really a consequence of their share price relative to the coal price. And their share prices have been on a tear for 4 years.
Yeah, it's been incredible. I mean, hundreds and hundreds of percent.
Right.
In some cases, over 100% a year.
Yep.
Okay, oil. Brad wants to know, gentlemen, thank you for what you do for the community. Thank you for being here, Brad. Any thoughts on Blackstone Minerals?
I like Blackstone. You may be coming too far down the quality trail there in the sense it's a small cap company, but they have a great mineral spread. They have been very polite to shareholders in terms of distributing free cash flow to shareholders. My temptation for people who are new to the oil space in the United States is to start with Exxon. Start with the biggest and the best, the least challenging. For those people who are more sophisticated in the oil trade, certainly owning the minerals companies, and within the minerals universe, one would want to look at Blackstone, is an advisable diversifier. I have Blackstone as a 4.
Okay, is there that's probably got to be one of my favorites because, it pays double a treasury. If you can snag this thing at $15 a share, it pays exactly 10% dividend. They had a recent reduction to the dividends, so instead of getting, 12 and a half, you're getting 10. Is there some undue risk here that I'm unaware of?
Well, I think the risk has been that their production ramp up has had to do with minerals underneath what drillers consider to be class 1 drilling locations. And I think that the inventory of class 1 drilling locations is beginning to dwindle with current technology. So I think that the production increases that they've seen in the last 5 or 6 years will be increasingly challenged in the future. I think, too, that the revenues that they get from natural gas will continue to be challenged by very low natural gas prices in the state of Texas, where there's a surplus of natural gas as a consequence of co-production with oil wells.
Okay. Okay. So the volume that they've enjoyed is, unless they can rediscover some new ones, is going to gradually dwindle.
Yeah, the volume increases. The pace of increases is certainly going to stop. It's important to note that when you drill these unconventional reserves, the shale reserves, that the majority of the net present value of the well uh, comes out during the flush production period, which is to say the first year and a half to 3 years. Then they taper off fairly rapidly. It's also important to note, though, that technology improves virtually every quarter with regards to retreating these wells, going in and refracturing them and restoring, if not initial production, 70 or 80% of initial production. There are some wells in the Eagle Ford which have now been retreated 3 or 4 times, and the recoveries that they have received over the life stream of the wellbore are roughly 3 times the recoveries that had been projected when the first well was drilled. So there are technological solutions, potential technological solutions to some of the problems that Blackstone, and by extension, the rest of the domestic oil and gas industry face.
Okay. Alrighty. Cash and T-bills. Tish wants to know. Hi, Steve. Rick shares many times that he keeps a liquid position for buying valuable assets when the market seems gloomy. What percent is a good liquid position, including gold? My intention is to learn how he controls risk and return.
Well, right now my cash position is too high. I have liquidated a position in passive interests in developed real estate, and my cash position is too high. I'm looking to continue to allocate that. For most non-professional investors, I would consider a minimum of 10 and a maximum of 20% in liquidity, provided that gold is included in that liquidity. I wouldn't discourage people from holding 30%, depending on how they feel about things. It is true, however, that large cash positions diminish investment performance. If you look at the deterioration of the purchasing power of the US dollar, which, as you and I have discussed before, Steve, is not accurately measured by the CPI, I anticipate that the purchasing power of my savings is declining by about 7.5% a year. And so my T-bill holdings at 4.3, 4.4 certainly aren't keeping pace with the deterioration of my purchasing power. I regard the negative interest income really as an option payment to have liquidity to use. I also include gold in my liquidity, but because that's because I've proven to myself over the last 45 years that when an asset class becomes more attractive, I am willing to sell the gold and use the proceeds to buy that other asset class. There are some investors who trick themselves into believing that their gold is liquidity, but they'll never sell. So then, and that's okay, but they can't regard that gold as liquidity, because for them it's not liquid.
Okay, I might be a little high then. I got 20% in rolling T-bills, and then I have even. Are you counting the gold position as something like PHYS, like the Sprott Physical Gold Trust, or
I
are you
do.
also including in like Agnico Eagle?
No, I'm not including the gold stocks.
Okay.
I'm including physical gold and things like the GLD ETF, and of course the Sprott physical products, physical trusts.
Okay. All right. Thank you. All right. What time we at? All right. Let's do the lightning round here. AJB wants to know Elemental Altus royalties.
I have Elemental Altus as a 5. My legacy partnerships, the exploration capital partnerships, have been selling, not because they regard Elemental Altus as a bad position, but rather because those partnerships had 10-year fuses and time is running out.
Okay. Boyan wants to know Gold Mining Inc.
Gold Mining Inc. Perpetually overpriced. With the share price decline and with the continued beneficiation of their projects, I've moved that from a 6 to a 5. I may move it up to a 4. Very well run company. Stubbornly high G&A, but they're very, very active. For people who don't know the story, Amir Adnani and the team were very active buying gold assets during a period of time when nobody wanted them. They created something called gold royalty by creating a royalty on the projects that they own and spun that off into a public market, which they still control. And now they have a very experienced team that they've recruited that will begin to turn those assets that had no value when gold was at $300 or $400 into, in some cases, operating mines or joint ventures with other, now that the gold price is in the $2,400 to $2,500 range. Really, really, really excellent job of execution over the last 20 years.
Okay. Leo wants to know District Metals Corporation.
Don't know enough to comment.
Okay. Act wants to know Endeavor Mining.
Endeavor Mining, I've been a buyer of. They have done a absolutely splendid job of implementation over 20 years. That track record suffered really grievous interruption with the CEO resigning and being accused and I guess admitting to embezzlement. That resulted in a precipitous share price decline. He was, of course, allowed to pursue other employment opportunities. The market seems to be betting against his successor's ability to beneficiate their pipeline. I'm taking the other side of the bet. I will note, however, that some of the team that was so successful in building Endeavor has moved sideways to go to work for the Lundin family in Montage Gold, which is the Lundin's attempt to build a consolidator in the West African gold fields.
Okay. What ranking would you give him?
I have Endeavor as a 4.
As a 4. Okay. RFM, Black Rock Silver in Nevada.
Don't know enough to comment.
Okay. Master, Heliostar Metals.
Let's be polite and say I don't know enough to comment. I don't like their press releases.
Okay. And Ronald, I-80 Gold.
I-80 Gold I have as a 4. Exploration success, very, very strong CEO. The stock sold off as a consequence of the fact that a large shareholder, Equinox Gold, sold down their I-80 position to finance their own construction in northern Canada. It was always anticipated as I-80 was formed from the takeover of Premier by Equinox that the Equinox position would be sold down, would be used as a source of cash, and that has in fact happened.
Okay, and you said that one was at a 4. Awesome. Well, thank you very much, Rick. This has been a lot of fun. Any final closing thoughts?
No, that's it. I would encourage people, of course, who care what I think about natural resource portfolios to personalize it. go to my website, Rural Investment Media, list your natural resource stocks, and I will personally rank them 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues, as you've heard me do today, where I think my comments might have value.
Awesome. And the Rule Classroom, I will be there with you in about an hour and a half, and we'll be taking live listener questions. So there'll be a link down below for the Rule Classroom as well. I look forward to it, Rick. And the private placement boot camp coming up in August. There's a link down in the pinned comment below. Rick, thank you very much again for your time. You have a great rest of the day, sir.
Thank you, sir. Thank you for your support of the conference. I look forward to seeing you in an hour and a half at the Rule Classroom.
I will see you there. And thank you guys for tuning in. Share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.